Hi, my name is David, and in this video, we break down why XRP may be shifting from speculation toward real financial infrastructure and give you my perspective and opinion as well. We'll look at Ripple's $750 million buyback signaling a $50 billion valuation, the 60% drop in exchange balances suggesting whale accumulation, and how the crypto capital rotation cycle could drive XRP momentum. We'll also explore three long-term growth drivers: institutional adoption, regulatory clarity, and DeFi ecosystem expansion. But competition from Ethereum, Solana, and private bank blockchains raises a critical question. Will XRP become global financial infrastructure, or remain a speculative asset? XRP is shifting from speculation to serious institutional plumbing. A $750 million buyback signals a $50 billion valuation floor, while declining exchange balances prove whales are quietly accumulating for the long haul. Beyond simple payments, the XRP ledger is evolving to host DeFi and real-world assets. We're at a crossroads. Will XRP become the backbone of global financial infrastructure or remain a speculative asset? The fundamentals suggest a massive transition. Ripple has launched a $750 million share buyback program, signaling massive internal confidence. This corporate move allows early investors and employees to sell equity back to the company, effectively raising Ripple's internal valuation to roughly $50 billion. Markets interpret this capital deployment as a definitive signal of confidence in the long-term growth potential of the XRP ledger ecosystem. The visual displays this transition of equity into the Ripple vault. On-chain data confirms XRP exchange balances have plummeted from 4.0 B to 1.6 B, hitting a definitive yearly low. This 60% decline is being driven by institutional accumulation. In my opinion, this aggressive move to private storage by whales is the most bullish signal we've seen all year, as it creates a massive supply shock. This shift from exchanges to cold storage indicates that major players are positioning for the long term. Just wait a second. If you're watching this video and enjoying it, please press that like button. This gives me a lot of energy. Thank you. Here's the breakdown of the capital rotation cycle and the waterfall effect. The market follows a clear sequence of liquidity. As Bitcoin and Ethereum hit their peaks, capital begins to cascade downward into mid-cap and large-cap assets. My perspective is that this is where the real altcoin season is born. It isn't a random pump, but a calculated rotation of profits seeking higher beta returns in established ecosystems like XRP. This waterfall effect creates short, intense bursts of price strength, ultimately proving that XRP's momentum is deeply tied to the broader crypto macro cycle. Capital has finally reached the lower tiers, and the rotation is in full effect. The strategic horizon identifies three core growth drivers for the XRP ecosystem. First, institutional adoption is accelerating through major partnerships with banks and financial institutions. Second, regulatory clarity is establishing a solid foundation for mainstream financial integration. Finally, ecosystem expansion is being driven by the growth of decentralized finance and smart contract capabilities on the XRP ledger. These elements combine to define the long-term trajectory for XRP's global utility. The strategic horizon focuses on three core growth drivers for the XRP ecosystem. First, institutional adoption is accelerating through major partnerships with banks and financial institutions. Second, regulatory clarity is establishing a solid foundation for mainstream financial integration. Finally, ecosystem expansion is being driven by the growth of decentralized finance and smart contract capabilities on the XRP ledger. These elements combine to define the long-term trajectory for XRP's global utility. The long-term direction of the XRP ledger is built on three major forces shaping its growth. The first is rising institutional adoption, as partnerships with global banks and financial institutions continue to expand. The second pillar is regulatory clarity, which creates the stability needed for deeper integration into mainstream finance. The third driver is ecosystem expansion, supported by decentralized finance and smart contract capabilities. Together, these elements outline the XRP ledger's evolving role and its long-term utility within the broader financial system. The XRP ledger is seeing a massive surge in utility, and the data is clear. We've reached a milestone of 100+ financial institutions actively exploring and integrating this technology. This institutional growth is backed by three critical pillars: scaling partnerships with global banks, established regulatory clarity, and a massive ecosystem expansion through DeFi and smart contracts. This is the foundation for long-term utility and global financial integration. XRP is positioning itself as a network designed for high-speed settlement between banks and financial institutions. But the competitive landscape around it is becoming increasingly intense. Ethereum dominates the decentralized finance ecosystem, while Solana captures a large share of retail trading activity. At the same time, private blockchain systems developed by banks could bypass public networks entirely. In my view, this means XRP's biggest challenge is not just technology, it's achieving large-scale institutional adoption quickly enough to stay relevant. This graph illustrates the tension between market noise and steady growth. The top chart shows jagged short-term volatility, driven by erratic triggers like macroeconomic news, liquidity shifts, and uncertain regulation. Below it, the long-term vision reveals a smooth, upward trajectory fueled by financial infrastructure integration. The takeaway is clear: while crypto reacts aggressively to immediate conditions, the overarching bullish thesis remains anchored in fundamental utility and institutional adoption. What we're looking at here is essentially the ultimate strategic crossroads for the XRP ledger. On one side, Path A, you have the scenario where XRP becomes part of core global financial infrastructure, acting as a liquidity bridge for institutions and cross-border settlement. That's the big vision, real adoption from banks and payment networks that would anchor its utility in the financial system. But Path B tells a very different story. In that scenario, the ledger never fully captures institutional momentum and instead remains largely a speculative digital asset driven by market cycles rather than real financial use. In my view, this moment is really about adoption timing. Technologies like this don't just win because they exist, they win because they reach critical mass first. If XRP manages to secure meaningful institutional integration early, its role could become extremely durable. But if adoption stalls while other systems or networks capture that infrastructure layer, its influence could end up far more limited.